Good afternoon, all. Steve Parisi here with IBC Global. I hope your day is off to a fantastic start. Today, we have a guest that I've known for several years and I personally love working with, Monica Harper. Monica, how are you today?
I'm good. Thanks for having me.
Oh, definitely. Thanks for agreeing to be on. I think this is going to be a lot of fun, especially for people that love the inner workings of whole life insurance and how to maximize the cash value because you know your stuff when it comes to that. So, Monica, before we just get into talking about life insurance, and to prep the audience and everyone watching, can you share a little bit about what you do here at the company? You can start with how many years you've worked here, when you started, if you'd like, and then just talk a little bit about your role, your department, and what you do.
Yeah, of course. So I've been with the company for 4 years, going on 5 in May. It feels like it was just yesterday that I
It
started
does.
joining.
Yeah.
And my role in the company is just to maximize the cash value of all policies, just to make it better for the client, especially with everything going on in the world, inflation. We want to look out for the client in that aspect.
Yeah, definitely. So your specific department is the case design department. So what that means is everyone we speak with, or when someone reaches out to our company, if they're interested in a whole life insurance policy, cash value is the goal. They'll speak with one of our frontline agents, people that are well versed in the insurance products themselves and can put the illustrations together. However, we like to show multiple options. So what happens is the agent will have a conversation with the interested individual, and that person wants to see different illustrations with different numbers, and then the request is submitted to your department. And your goal, when you see a request come through, what's the first thing you do? Or before I get into that, actually, what's your end goal there? So you see a request come through, somebody wants to pay in 10 grand per year, whatever the number is. Like, what are you aiming to do every single time?
We are aiming to maximize the cash value every single time,
Yeah.
especially when it comes to clients who are putting in a little bit amount of money, a big amount of money. We just try to look out for the maximum cash value for every client, regardless of age, gender, how much they're putting in. That's always our end goal in case design.
Yeah, max out that cash value from start to finish. How many times do you find yourself having to pivot? For example, if an agent requests a certain company and product, but it's say a smaller dollar amount where you look at it and say, "Hey, this isn't going to work because the minimum requirements of this company or product like it just doesn't fit." Like what do you do in that type of situation?
And that type of situation, depending on what the software does for us, we will usually still show that product just because, we know a lot of our clients would like to see different outcomes regardless of how bad it may look. But we
Yeah.
also like to show alternatives like cash value products that will show better for that client for what they're looking for.
Yeah.
Like I had an experience yesterday and I did a case where I was working with a 75-year-old woman who wanted to see 10K for 10 years for a HEC V for a high early cash value for, sorry, I have to stop the lingo.
Yeah, no, it's all good. Yeah.
So because a high early cash value, the base premium is usually higher, especially with an age group like that. We still showed it just because, just so that way the client can see what it would look like. But we also showed a Legacy 100, which worked better for her in the case where the 10K will still be able to show the base wasn't too high and it looked better for her age wise.
Yeah, very nice. You improve the numbers. Did the agent request that extra product, or is that something you looked at? Go ahead.
That's something that I looked at.
Yeah.
The agent had requested a high early cash value and an L95 dividend. And obviously the dividend worked because Guardian is so flexible with people of all ages. But
Yeah.
because Mass is a little bit more complicated, we just showed the high early cash value, but I also added the Legacy 100 just because it worked better for her base wise, cash value wise, with the age and with how much she was putting in.
Yeah, you could really reduce that base premium was the thing. You get more money to PUAs. Yeah. That's pretty cool. And that's really really good to hear that you personally do that. I know Joy does at the department. I think all of the case designers can do that now. But that's a big thing of mine. Like when I started in the business, before I knew how to do any of the illustration software, what would always happen is requests are made from a licensed agent to the insurance company saying, I'd like to see illustrations with this much money going in every year. And then what'll happen is the insurance company or maybe someone in the local office will produce those illustrations. However, the theme was always, okay, let's get these dollars going into the policy, and how do we solve it so it's profitable for the insurance company or the agency, which means a higher base premium and less cash value up front. And if it didn't come back how I or any agent would like, what would have to happen is you'd have to go back and re-request it. It would take a couple days, and it can be frustrating when you're trying to help someone move across the finish line. So the fact that you're able to look at it, run numbers, and say, hey, if this is me, no, I don't really want this, or I wouldn't want this. I still want to show it. So here you go. Here's your request. But then, by the way, here's an alternative that I think you might like a little bit more.
Yeah.
Yeah.
We really try to look out for the best what we can for our clients, because we're all, they just want a policy with the maximum cash value. And a lot of them, don't have enough knowledge to know what works and what doesn't work. And,
Yeah.
we just try to do our best knowledge-wise to provide the client and the agent with as much information as possible. So that way both are informed.
Yeah. So from 9 to 5, like, what are you doing all day?
Math.
I like that. Nice.
Math, yeah. You just,
Yeah.
as soon as you clock in at 9, because we get requests in every day.
Yeah.
So whatever pops in, we go in the softwares, crank
Yeah.
out illustrations, try to do the best that we can for the client, for the agent, try to get it out in a timely manner.
Yep. Yeah. How do you produce the best results as quickly as possible? So you run the numbers, you complete the math, you've got the polished illustration, which a lot of times is 20 plus pages long. From that point, do you just send it to the agent and say, hey, here you go, you do the rest, or are there some extra steps there?
We actually do some extra steps. So
Yeah.
we not only do we give the illustrations to the agents, but we also give our data text files, the text files that come with the illustration that the software gives, and we send that out to another department in our case design department, our spreadsheeters, and they take that data and make it into a nice compiled little spreadsheet to make it easy for the client to look out, easy for the client to understand, and easy for the agent to explain.
Yeah. That's the key there. Taking all of that information where you've got the data, but then also making it presentable. Yeah. And then we've got a compliance side we still have to balance. That's where we still send the full illustrations. But yeah, it's a project. Like, there's a lot of time and work that goes into getting everything right within your department. Just like when an illustration comes in, there's a lot of information that goes into that. Yeah, you guys do a good job. So here's a question. If I am a non-sales agent and I come to you, so you're not selling the policy, but you know the inner workings of how they should be designed and how to maximize the cash value. So I'm interested in a policy and I'm saying, okay, I want to put in $100,000 per year for 10 years, right? That's $1 million into a whole life insurance policy. What would you do if you were me? Like, what product, what company, like, what would you recommend? I'm 50 years old, say. Because I know you'll ask.
For 50,
Yeah.
so for a 50-year-old with that much, I would go with either the Heck V, the high early cash value, or the 15 legacy pay.
Yeah.
Because they both produce good cash value numbers in the long run.
Yeah.
And because your age is, you're still pretty high according to the insurances policy and age, but because you're putting so much in, the cash value will definitely look better. But if I had to choose between the high early cash value and the L15, I would probably go with the L15 because that would definitely be better cash value wise than it would early cash value.
Yeah, you'll see a higher internal rate of return, so stronger cash values. So 50 years old, if I want to stop after year 10 though, so between the two, I would do the 15 pay. What if I want to go less than 15 years? What about less than 10 years?
Less than 10 years. That would probably be, for that much, I would probably go with the Legacy 10.
Yep.
Because you're going with so short, and it's literally just a policy that runs for 10 years.
Yep.
The cash value would still be good with how much you're putting in.
Yeah. Yeah, that's the same thing I would do. I ask that question just because when you look at those different products, focusing on mass right now, a 10 pay does have the highest internal rate of return. but you can only pay into it for 10 years, like you said.
Yeah.
15 pay is the next best thing. Maximum funding period is 15 years. And then a high early cash value product, you can fund as long as you want, until you're 85. So almost forever. What if I said, hey, I want to be able to pay in 100 grand per year, but I don't want to get a bill for 100 grand per year. Like I'm kind of nervous to commit, but I still want to be able to get that amount in. Would you recommend a Mass Mutual in that situation?
I would probably recommend Guardian in that situation because Guardian is so flexible
Yeah.
and it's a good starter for someone who is still on the rocks about joining. Mass
Yeah.
Mutual is kind of like to the letter, and it's just like once you in it, you're in it, and that's just about as far as you can go. But from Guardian,
Yeah.
it is so much more flexible and it's so much better for a client who is just starting out because it's flexible.
Yeah. Ability to commit to a small amount and add more at your discretion as the policyholder. Yeah, exactly. What if I want to fund, say, a smaller amount of 10 grand per year, but I want to do it for 30 years?
Then I would probably go for the L95 dividends
Oh, yeah. Hmm.
or the Hec V.
Yeah.
Because again, with Guardian is flexible and you're able to, for Guardian, because it's a flexible software, you're able to get the cash value kind of where you want it when you design it because it's so flexible. And I would do the Hec V because that goes on for until 85 and
Yeah.
the cash value will look better because it's high early cash value. So the cash value will look better the longer that it funds.
Yeah, definitely. I agree. That's what I would do too. Let's talk about policy loans. So, we're not going to talk about how they work, but how do you present them in an easy fashion to understand? Because when you look at a loan spreadsheet or a loan illustration, just the PDF, it's confusing for a lot of people. So, what's your process when you see a loan request come through the system?
So when we see a loan request come to the system, it usually comes into three. So it's the original um case that came in. So say 10K for 10 years. And then you would do another one, 10K with 10K for 10 years with interest. And then you would do another one with a no repay, which means that you're just paying in the loan without repaying it back.
Yeah.
And then you have the third option where you have the 10K for 10 years and then you're putting it back after you repay it. And we like to show those three options so that way the client can see, okay, so this is what it looks like with interest if I add it. This is what it looks like if I just take the loan and just don't repay it at all, and how your policy looks after that, and then what your policy looks like when you pay it back. And the thing with loans is that you can pay it back whenever you really feel, whenever
Yeah.
you can, however much you want, but you just have to be conscious of how it's going to make your policy look.
Yeah. Yeah, and you showing that to give people the ability to see it instead of just hear about it really goes a long way. And when you put that together, so you'll run the illustrations. So anyone who sees that on an illustration from an insurance carrier, yeah, the information's in there, but it can be overbearing or overwhelming. So how do you actually like format that from a ease of view standpoint?
So after it's the same way we do it. So the agent is more likely to understand the PDF version of it because that's what they're trained to do. But for client wise, obviously looking at a PDF is going to be extremely overwhelming, extremely confusing, and you're going to see a whole bunch of adding and subtracting and things that you probably would probably scare you.
Yeah.
So what we also do is that we take that same information that we would when we do it in a regular case with the loan and we take it to our spreadsheeting department. And they're able to break it up and put it in categories to where it's less overwhelming. So that
Nice.
way, when you look at it in the spreadsheet, it's not as overwhelming. And you can be like, oh, okay, so this is what my policy will look like with interest. This is what the cash value will look like. And it's so, such an easy format.
Much easier to follow. Yeah, I see what you guys do too, as far as always starting with the basics. Here's the basic illustration where you pay money in and just let it sit and grow, compared to the scenario where you take loans and pay interest only, never pay any principal. Then, if you're on Excel, you'll click tab 2, and then you'll have the example with no payments, and tab 3 will show paying everything back. But that way, it makes it very, very easy for you to hand it to the agent. The agent says, okay, got it, and then they can do the same for the individual. That's important because the stuff is overwhelming to most individuals unless they spent a lot of time trying to understand it. Yeah.
Yeah, definitely.
Cool. So let's talk about existing clients. So running new illustrations, that's what you guys do for the most part because we like to show a lot of options when someone comes through. However, let's say I've purchased a policy with the company. Let's say my original plan was to fund $10,000 per year for 10 years, just a round number. I'm 5 years in. I've paid 10K every year, so I've stayed on the course thus far. I say, hey, I'd like to see how my policy has performed and what do things look like moving forward. What goes into that? Like, what do you guys do there?
So in a case like that, that's what we in case design call an in-force illustration.
Yep.
And the best part about that is that if a client would like to see that, I know usually when you're paying in for your policy, the PDF that's shown in the moment looks really confusing and it doesn't look like anything that it did when you first put it in. So what we at Case Design do, all we need is the illustration number, the case number that goes with your illustration, as long as it's a year after its policy.
Yep.
And what we're able to do is go in there and then as long as we have the original that was put in when you put in with your policy, we're able to manipulate the software with what the software gives us because when we have it in force, it's not as flexible as it would be if it's like a whole brand new client that we're
Right.
starting with. We have certain areas that we can mess around with and certain areas we can't. So we try to manipulate it in the way, in the areas that we're given. So that way the client can see, okay, this is what I'm working with. This is what I'm working with, what it looks like, how good it looks, how much they have left to
Yep.
pay, or if it needs to be changed in any way, shape, or form.
Yep. Nice. So, does the in-force illustration show what has happened in the past?
It does not.
No. So, everything moving forward.
Yep.
So, what if I said to the agent, I'd like to see the last 5 years of what actually happened?
Well, I know we in Case Design are currently still working on how to provide the previous years. We're
Yeah.
still working on a way to get that because we understand how frustrating it can be for a client to look at them and be like, okay, well, I know that this is what I'm paying now, but what about previous years?
Yeah.
And we can understand how frustrating that can be because, it's not giving enough information for you to be able to plan for the future.
Yeah.
So we are currently still working on a way where we can show the previous years with the previous cash value and their previous death benefit. So that way, in the
Yeah.
future, sometime in the future, when we give it to the client, they can be like, okay, so this is what I'm working with. This is all the numbers that I'm working with, and they'll be able to plan better for how they want to use the rest of their policy.
Yeah. A way that you can automate it more so. Because I know you guys have done it a couple times. Thanks for mentioning that too. Like our current process there is very, very time consuming, where if we want to show what's happened the past 5 years, what that involves is pulling two things: the transaction history, so we can see what they actually paid in every year, especially if they added money every month. If they added money at leisure with Guardian, you got to pull each PUA payment. And then also we'll pull the annual statements so we can see what the actual cash value was at the end of each year along with the death benefit. And then we'll just manually take those numbers, plug them into Excel. This way you can see the first year, here's your total payments, here's the cash value death benefit, year on and year on. So it's a lot of manual work. It works, it just takes a lot of time. So that is something that I know you guys are working on automating. It'll come in time.
Yep.
Yeah, definitely. So on that same point, so this is the same topic, but what if my original plan was to fund $10,000 per year for 10 years, but I'm 5 years in, but I didn't fund 10K per year. Let's say I funded 5K the first year, then 8K the next. I was up and down. Like, what happens then?
So what happens then is that the policy will let us know as soon as we come in, because a lot of times when we put in the policy number, that we usually get little messages that pop up in the results screen that tells us if it's mecking, in what year, and
Yep.
what fashion. And a lot of times, in a case like that, it will mech and the policy will be like, hey, you're not paying what you need to be paying. So this is what it looks like now. And, we're still able to show what it looks like, but it may, the term may burn out in a certain years to where it won't fund as fully as what you originally put in will.
Yeah. Yeah. So no, yeah, on the mech topic too, like where that would happen, just for listeners, if you've underfunded your policy, underfunding doesn't mean it will automatically trigger a mech. What Monica's hitting on there is a good point where if I needed to aggressively fund it, especially up front, to keep the term rider funded properly and prevent the term drop off early, which could trigger a mech if my death benefit drops within the first 7 years, is that what you're referring to?
Yes.
Okay, perfect. So that's the kind of stuff that we want to look at year over year and make sure it never happens. And Where that kind of stuff typically does happen is if someone has only paid the minimum each year, where they plan to fund a lot. I plan to fund 100K per year, but I only funded 10 or 12K per year minimum relative to my total payment. And then we want to pivot accordingly. That's where we would look at solutions, whether A, pay more money into it, or B, reduce the death benefit to prevent a situation from like that from occurring.
Mhm.
Yeah. Have you ever done that? I think you've worked on it with Joy. I know I have. Have you ever had a situation where someone has a policy, say the death benefit's $2 million, and the agent has a conversation with them, and the conversation from the client is, I think I went too big in the beginning. I want to shrink this policy down a little bit because you can do that after you start. Have you ever done that where you've adjusted the death benefit downward in the in-force illustration software?
I personally have not experienced that yet. I
Yeah.
know Joey has, and the best part is, I believe in Mass Mutual, and I believe in Guardian too, with our most recent updates, because they update constantly. So with our most recent updates, it let us know that we were actually able to manipulate how the death benefit works, so that way it can look better for the client. I personally haven't done it yet, but I
Yeah.
know that with the most recent updates, we're able to do that now, whereas before we weren't.
Yeah, no, it's a good option to be aware of, to say the least. Like when someone gets into a life happens scenario and they can't fund the policy with what they thought they could, because this happens, right? Whether it's intentional or life happens and now we can't pay anything in, knowing what levers to pull just to show that same product to say, hey, I know you went through this. I know you can't fund what you thought you could, but it's okay. And here's the proof as far as the numbers and such go. People look at that, and the reaction is typically, "Oh, okay. I thought it was going to lapse, or I was just going to lose the policy altogether, or my value is going to go backwards." Like, no, no, no. You can make adjustments here to salvage the policy, and even see it perform at a high level sometimes, which is pretty cool. And really just having your knowledge as far as what to do in the software and knowing the do's and do nots, that really helps, especially if an agent is in a situation where they're like, I'm not quite sure what to do here. You showing those extra options can really give them peace of mind, but most importantly, the client peace of mind.
Yeah, we do what we can to help both the agents and the clients, because it is a lot. It is gets confusing if you don't know what you're doing, and if you
Yeah.
don't know what you're looking for, it can get really confusing. And we just try our best that we can to make sure that we let the agent know what we did, exactly why we did it, why we did what we did, why we chose this, why we chose that, why we did something different that we normally wouldn't do. So that way they can be like, okay, I understand. And that way they can translate it to the client. So that way it's good communication all the way around.
Yeah, that's really important. If you don't know the why and a client asks, like, why did you do that? That can make an agent look bad. So it's good that you guys do that. It's really important. I know that's just part of the culture here, too. Like, you've got to communicate that stuff. Nice job doing so. Cool. Anything else that you wanted to cover or talk about today, my friend, before we wrap up?
um, I don't know. I mean, no.
That is all good. We can talk numbers all day and such, but no, all good. I do appreciate you having you being on today, very, very much so. If anyone would like to talk to Monica about designing a policy, you have to speak to one of our agents. But thank you so much for watching, Monica. Thank you again. We will talk to you soon.
Thank you for having me.
All right, more than welcome. Thank you.